Hey traders, this is Ron Haight. Hope you guys had a great weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involve risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with weekly charts of the Dow and the S&P. So first up, DIA, Diamond ETF. We closed a little higher. Resistance target's going to be 260, and then the all-time high is back in the September timeframe. The close up there was 265. So 260, 265, those are the targets. It's fine. This looks bullish, and the only way the weeklies would not turn bullish is if we got back below all these moving averages, which the blue line is the 5-period. It's now crossed up through the red and the orange. Red's 20-period, 50 is orange. That's a technical buy signal as well, a bullish signal. Here's SPY, again, weekly. If I zoom in, we closed at 270.47. Well, the 50-day is at 270.14. A lousy 33 cents, but it is what it is. So technically, this is also swinging bullish now on a weekly basis. Again, if we get back below all these moving averages, that would put the target back down here, which are the previous lows. So weeklies on the Dow and the S&P, both bullish. Now, let's take that weekly on the S&P and make it a daily. Now, if I zoom in, you can see it gets more pronounced when you use daily charts here. Bottom fell out. I said watch 260 within 2 weeks, 260, 235, and now it's been a V recovery. We did get back above the purple line on the ETF back on the 5th. We're falling below it. No big deal at all. Watch the red line. That is a 20-day moving average now, exponential moving average. We get below the red, then the shorter term trends go neutral. We get to the orange. We get below the orange, which is the 50-day institutional moving average. Then we start talking about down here. But despite the little selling on Wednesday, Thursday, we're still sitting fine here. There's no big concerns yet at all. Here is the Dow. Zoom in a little closer. It had 3 down days, Wednesday, Thursday, Friday. We're still above the 200-day in purple, the 20-day in red, 50-day in orange. You probably know by now where I'm going to say the key area is. It's the 50. Yes, the 20 is important because that's going to take out the short-term trend. I still want to watch it. The big one is the 50. So maybe we can set alerts if we wanted to follow this closely right around where the 20-day is, which is around 247.5. We get below that, we really want to watch this level. But so far, these are setting up just fine. And then if I do the Qs and we zoom in, the Qs got stuck at the 200-day moving average in purple back on the 5th, which would have been Tuesday. We're coming back down. Again, watch the 20-day in red. It acted as support here and here. Also, the 50-day in orange came in and acted as support. So we get below the orange. We get below the red. We then go to the orange. Below the orange, yikes, then it's back down here. So this still sets up bullish too. We'll take a quick peek at just the Russell 2000 here, IWM. We're not quite at the 200-day yet. These guys are still lagging, but they're still acting bullish. Again, watch the 20-day for your first sign of trouble, and then definitely the 50-day. Now, looking at some other stocks. Keep getting some questions on Faceplant, otherwise known as Facebook, otherwise known as we have no idea what we do with your personal information. Stock gaps up on earnings, and now we're just going sideways. This is caught in a trading range. If I zoom in further, we need to hold these closing lows. And I'll take, what's the closing low there from the first? 165, basically. I could just round it down and say, if I want to watch Facebook, set an alert that if it trades or closes below 165, I want to be aware. Now, I'm happy to do this as an end-of-day procedure below 165 because that puts the gap fill on the table down to 150. That's a 15 or nearly 10% drop. Otherwise, it's neutral to bullish. If it closes above these recent highs here, we could use the closing high from the 5th, which was 170.116. Closes above there, that's bullish. Right now, this is just digesting the big pop. So it's back and forth, back and forth, back and forth, and we need to see who's going to get the win. We're going to start drifting lower, and then sellers come in because gaps often fill. They come to fruition, and you come down here, or are we going to get momentum on a breakout? So I'll keep watching FB as well. Here is EA, Electronic Arts. We talked about it getting above the 50-day, how I liked it when you have such a prolonged downtrend, you get back above the 50-day. Institutional moving average volume did perk up a little bit, and then we just go back test, sideways, sideways, sideways. Earnings gap down. It needed to get below this level before it became ugly. What happened? Complete reversal, took out the previous highs, closed at the highs of the day on huge volume. That tells me the bulls are back. this turns out to be a fake out, shakeout. Target, might as well say the 200-day. That's all the way up at 112. $15 higher. Not bad. Over 15% would be the upside technical target right now. Here's a couple stocks we don't always look at. Here's MHK. This is Mohawk Industries. 2-year daily, I'll zoom in. This stock has gone, just in case you don't know, from 275-ish, 280-ish, all the way down to under $1.25. Well, now we finally got a pop up on volume. We're into the gap. So the immediate target is 150, 10% higher. Then it becomes the 200-day just because it's there. And then you're back up into the 180, 190 area. Some seriously, I think, attractive upside technical targets. What I would potentially consider for a trailing stop, you probably guessed it, the red line, 20-day EMA as a momentum trailing stop. Here is SGEN, which is Seattle Genetics. This one, it's been a roller coaster. In May, it was just under 50. Then you go up to about 82.50. Then within 1 month, you go from 82.50 to 52.50. And then you play ping pong a little bit. And then you go from right around when the market bottomed around Christmas Eve, from 52.50 right back up to 77.50. And now you're back at 65. It almost acts like Tesla. You can see a W-type pattern in here. You can also see the idea for a deep dish cup and handle or something. But given this is an earnings move, I would throw those patterns out the window. Fundamentals typically trump technicals. And right now, it barely closed by about 2 cents below the 50-day. Given that kind of volume, this would be the target now, 52.50 right now. For it to, quote, break out and be bullish when something like this happens, we need new highs. That's way up there. There's a tremendous amount of upside work that needs to be done now for this stock. As of right now, target's down here. And then if we take a look at SKX, which is a seasonally bullish stock over the coming weeks, if I zoom in, earnings move, had a nice pop. Stock goes from around 27.50 up to about 32. Not bad. But it closed at 31.91. This closing high was 33.25. It's about another $1.30, 40 higher. We get above that, the gap fill all the way up to 42.50 comes into play as the upside technical target. There's a little bit of resistance that might come in around 38, 39, but the gap down is what will be the target from where it gapped down. We're going to keep an eye on this one. So earnings surprise, not really a surprise because it seasonally is bullish this kind of time of year, and you're going to see that in so many stocks. There's one thing that you can still take earnings as crapshoots, but the one thing I wouldn't want to do is walk in and say, oh, Skechers is having trouble. I'm going to be bearish on its earnings report. Yet when you walk into the next couple weeks, it's actually bullish historically, meaning the money comes in, not goes out. The company could still be in trouble, but this is not the report to be bearish on. And that's what's so critically important in understanding seasonality. You can be bearish, just might want to check what time of year plays in your favor. And in this case, it played to be bullish, not bearish. Here is CLF. We've been talking about this one, but I'm bringing it in because it's a cheap little stock, and I try to bring you guys different types of trade ideas, whether they're expensively priced or cheap priced just in dollar terms. But this one really worked out well. On 117, we closed at 905. We got above the 50-day. Then we come back down and we start running. Then we bull flag into earnings, and now we're popping higher. Previous highs up here start around 12.50. We're only about 70 cents away right now. I think the easy move is now done. I mean, in fact, Friday's intraday high was 12.26. We're starting to get into this overhead supply area, which would naturally put a cap and, frankly, probably led to some of that pullback, which is why we didn't finish at the highs of the day. This is an area where I would often just look to lock in profits if I was trading this one bullish or anything bullish. We could change this to XYZ stock. It doesn't matter. Bull flag breakout, bull flag breakout. Now you're coming into overhead supply. So if I take you back 2 years on CLF, you're at 2-year highs. So just imagine all those people that bought are now saying, oh, it's because prior to this, watch. I'm going to show you 5 years. I'm going to go daily just to bring my point home. If you bought back over here in February 17, it was not fun. 50% of your value is gone in a few months. Now you get back up, you set new highs, and you come right back down again. 40% or so loss. Now you have this kind of gain. These people are just looking to sell. Some of them, if they held on that long, which many do, they're buy and holders. It's a dangerous game to play. So anyway, enough said about this one. For remaining positions in a paper trading virtual trading account, which is always what I talk about, I would consider a 20-day EMA as an end-of-day trailing stop. But selling into strength is a wonderful thing. It allows you to potentially catch the peaks and the tops by selling into strength. It's a wonderful feeling. So practice that in a paper trading portfolio. Okay, that is it. I wish you guys a fantastic week ahead. I'll see you in the next video. Take care.